So as we get deeper on this journey of embarking on building relationships with strong institutions, credit unions and banks and different lenders in order to get access to the most capital possible at the best rates and the best terms, in order to be able to capitalize on opportunities that are so abundant in our economy here today. One of the most important components to building these relationships is not only going in understanding the type of value you need from these institutions and lenders and the type of products, type of loans and lines that you need, but also understanding what those banks and lenders are looking for from you. Meaning, translation, their underwriting. Who are they looking to do business with? Their internal score metrics, their underwriting, all of their different rules. These different components give us this, Rolodex of information in order to be able to crack the code to unlocking the vaults, getting our hands on the bag so we can go out and execute on opportunities. We understand a few things about underwriting systems that are pretty universal at almost any major bank or lender. We know that credit score is very important. We also know that credit profile, we're learning more and more that credit profile is very powerful and very important. Having a thick, balanced credit profile. We understand having a stable income is very important. We understand these different metrics, not applying for too much credit at one time. One of the most, if not the most significant, or at least the most underrated underwriting metric that financial institutions and lenders are attracted to that can override some of these other metrics that you may not be the strongest in yet and play a little bit of duality on the personal and business funding side is going to be an extra income, non-W2 income. W2 income is supreme in the eyes of lenders, especially when it comes to, mortgage loans. They really like it in any type of lending they do it because in their minds, it's the most stable. But when you have a W2 income and then a supplemental income, this is also very attractive because what this does is increases the attractiveness of your DTI. This lowers it by having more income relative to the amount of expenses you have been coming out via your credit report. So again, to make plain English sense for you, for those who are new, your DTI is debt to income ratio. This is basically your monthly debts reported on your credit report on a monthly basis, obviously, versus your gross annual income or broken down over the monthly basis as well. The deeper the spread is between those two, the more attractive you look to lenders, the more stable, the less risky you look to lenders. When you have this in place, this will allow you the ability to get access to credit at times when you might not be able to. If your credit is brand new or, thin profile or kind of got some bumps in the road on your credit score or profile, having a really strong income can overcome that. And not only that, but if that income is like you have a W2 income, but then you have like a 1099 income of some sort, this can now play a little duality because not only will it increase your overall income and improve your DTI, which again is one of the most attractive features. If you can have a great credit score, you can have a great credit profile. If you don't have a reasonable income that's stable and has enough spread from your expenses, you still may not get approved for a lot of loans and lines. Let's put it in perspective. But on the business side, once you can go out and build a business banking relationship, use that secondary income, and I'm talking gig work, freelance work, you're doing food delivery, Uber, you're a photographer, if you do, whatever you do on the side that you're not getting a W2 income for, but it's still coming in a legitimate payment form. This is pivotal. Please pay attention to this part because the Zelles, the Venmos, and the Cash Apps is killing a lot of you when it comes to being able to prove income. Most modern traditional banking institutions have not caught up to this as forms of income. It's a peer-to-peer transfer service in their eyes. It's not a form of direct deposit income or direct income in their eyes. It's too hard to discern. So whatever you have for 1099 income that we're using for the strategy I'm teaching you right now, you need to have it coming in a legitimate basis. You can try it through Zelle, you can try it through Venmo, you can try it through Cash App, but you're gonna have to show a lot of bank statements and you're gonna really have to prove your point versus it coming in some form of ACH, invoicing, QuickBooks. Much more attractive, much more understood by the eyes of lenders and underwriters. That having been said, picking up on our strategy, not only does this allow you to have a higher income and a better DTI on the personal side, kicking the door down at the Navy Federals, American Expresses, First Tech Credit Union, Chase Bank, Citibank, you name it, either side of the aisle. You also want to be able to use this income as business revenue, creating a business entity that is tailored around and some kind of incorporation, ideally LLC, S Corp, C Corp, whatever makes sense for you. Talk to an attorney or do your own research. Once you put this in place and can put a business entity in place and get business banking going and have your Grubhub, your Uber, your freelancing, your side work income coming in as business revenue. Mind you, got your W-2 covering your major bills. You got your W-2, as your official stable income, making you look attractive on that end. But now you have that other income going in, funneling into that business. If you've been following my content, you will know that one of my favorite business funding tools is lines of credit. It's a phenomenal tool. We're not going to go into all of the details on that right now, but more importantly, every line of credit needs revenue to be qualified for. Every line of credit needs revenue or collateral to be qualified for. So that means, like the American Express line of credit that I covered in a previous video, anywhere else, they're looking for you to have a certain amount of revenue and to approve you for that line of credit off of that revenue. Yes, you need personal credit. If you have business credit, it helps. If you have collateral, it helps. But when it comes to those traditional lines of credit, which are the most attractive, you need revenue. And if you have a 1099 freelancing income coming in a quality source, because when these banks go in to verify this revenue and it's going in as regular deposits or it's going in as sales and cash apps, it's gonna be harder for you to use it. You need it to either come through some kind of invoicing or some kind of ACH deposit. Do your homework on how to make that happen. It may take some legwork, but I promise you it's going to kick the door open when it comes to underwriting. Once you have that coming in, $1,000 a month, $1,500 a month, $2,000 a month or more, now you can start getting closer to qualifying for these business lines of credit through that revenue on that business. And you're using your personal labor to do it, or your personal skill set on the side to do it. This gets you the line of credit. And now once you have that and you qualify, you can go out and get an actual business off the ground or actual real estate investing, whatever your niche is that you want to get into. You're using your side income as business revenue, which is totally legitimate to do, especially if it's coming in a legitimate source, to qualify for these lines of credit at quality traditional institutions. When that happens, now you can basically write a check for whatever business opportunity, whatever franchise opportunity, whatever real estate investing opportunity that you see out there as viable and fitting for you. So keep this in mind as you're developing your strategy. Some of you are already in place with this. You just haven't realized this is a thing that you can exercise for yourself. If you have a secondary income, particularly a non-W-2, 1099 independent contractor, freelancing type of income coming in, that's coming in through some ACH direct deposit or through some invoicing, this is a very, very, very hidden strategy for you to be able to use as business revenue on top of it serving as additional income on your personal credit applications. Duality, using a 2-for-1. So I want you guys to know all the tools that are available to you or the ones you can go out in a few days and make possible. Because how hard is it to sign up for a food delivery or Uber or Lyft driver or whatever it is you want to go out here and do? If you do hair, you're a barber, whatever it is you do on the side, whatever freelancing business activity you got going on, turn that into a skill or turn that into an asset under the eyes of an underwriter so you can get access to these lines and loans that will allow you to capitalize on the opportunities that are out here. I want you guys to comment down below on how many of you have freelancing 1099 income and plan on using this strategy, already using this strategy, or plan on launching this to exercise this strategy. Comment down below and let me know what your thoughts are and what institution you plan on exercising it with. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. You're going to learn more about the channel. Links in the description below. You can start there as well as the about section of my channel. Other than that, I want y'all to stay focused, stay in motion. See y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.